MACD, RSI, and now insane combination that will blow your mind. First, we need to change the chart type to Heikin-Ashi. In this method, we use Heikin-Ashi candles. Then we need to add MACD and RSI to our chart. So here we click on indicators and we search MACD, this one, and then RSI, this one. Alright, now we have MACD and RSI on our chart and we need to give them special settings that makes them to work perfectly in conjunction with each other. First, we go to the settings of MACD and here for fast length we set it at 34 and for the slow length we set it at 144. We don't change anything else here and then we go to the style tab and we remove MACD line and signal line because we only need the histogram, and also for the appearance we change it to area. Alright, we're done with MACD and now we go to the settings of RSI. And first here in the inputs tab we set RSI length at 2 and then here in the style tab we scroll down and here for RSI upper band we set it at 95 and for RSI lower band we set it at 5. Alright, everything is already set on the chart and let's see how we trade based on this setup. This is suitable for scalping strategies because we're gonna take advantage of extreme levels of overbought or oversold and then catching the increased momentum on the opposite side. So this is good for time frames like 1 minute, 5 minutes and 15 minutes. Right now we are on 1 minute time frame. This is the price chart of euro to US dollar, but no limitation on this and you can use this trading strategy on any other asset or market. The only requirement is high trading volume and liquidity, both in terms of the asset and the broker or exchange that you're trading. So trading on top brokers or exchanges and also trading on highly liquid assets is recommended. For example, in Forex market, only major pairs, especially euro to US dollar, or in crypto market Bitcoin to USDT, because we don't want to experience any unreal price gap or large spread between bid and ask prices that can damage our trade entry, stop loss and profit. And also for scalping strategies, it's recommended to have a raw spread account if it is possible for you. Alright, let's see how we trade based on this strategy. This MACD with the special settings that we made will help us with the current momentum and longer term trend of the market. By the help of this MACD, we will be sure that we are in the right side of the market, and this RSI with the special settings that we made will help us to identify extreme oversold or overbought conditions in the market. We set overbought level at 95 and oversold level at 5, and we set RSI length on 2 so it will be more responsive to the price action. So when RSI line reaches or goes beyond this level or this level, it shows we are in an extreme level of oversold or overbought, and so reversal of the price is probable, but not any of them are suitable for trading because many of the times we can just have pullback after them, not suitable for trading, and MACD is going to help us with this to pick the best signals that have higher probability of being a profitable trading opportunity. Alright, when MACD is green, we focus on the times that RSI becomes oversold. We want the RSI line to touch or go below this level. If it is above the level or just near the level, it is not accepted. They can also be good trading opportunity, but we want to pick the best of them. When we are in extreme level of oversold, there is a probability for reversal and advancing of the price, and it is in the same direction with our MACD, which is above 0 and green showing an uptrend. So until now, we could identify an extreme oversold reading of RSI while the MACD histogram is green, and now we must decide when we should enter a long position. We wait for RSI to go back above this line and cross above the moving average line. In this example, you can see that at first it couldn't, but it happened here. When this crossing happened, here the Heikin-Ashi candle should be green, or if it's not green, we wait to see if we get a green candle. At first we had a doji here, which we don't enter on doji candle because it shows indecision, and then here we got a green candle. When we got the green candle, the MACD histogram should be still green in any step from the time that we have the initial oversold signal until we get a green candle. At any time that MACD histogram turns to red, the signal is rejected and we wait for the next opportunity. So in practice, when this candle is closed and everything is confirmed, we could enter a long position here, and this would be a profitable trade. As you can see, just one point that I must mention here is that these are Heikin-Ashi candles, and the closing price of this candle or opening price of this candle are not the current market price. These candles are calculated based on a formula, and this chart is more like an indicator that helps you to filter out the noises. So in practice, the price you enter may be a little different from the closing price that you see here, and this opening price of the next candle is just placed in the middle of the body of the previous candle. I have a complete guide to Heikin-Ashi chart. The link is also placed in the description, and I highly recommend you to watch it later so you better understand how you should work with Heikin-Ashi candles. Alright, moving on the chart, we have another opportunity here. We wait for RSI to go above its moving average line, which happened here at this point. MACD histogram still green, and we have a green Heikin-Ashi candle, so everything is confirmed, and we could enter another long position here based on the current price of the market. And this trade is also a profitable trade, as you can see. Here again we have an extreme oversold reading while the MACD histogram is green, but by the time that RSI crosses above the moving average line, the MACD histogram became red. So we stop here and this signal is rejected. While the MACD is red, we have RSI line above overbought level. When the MACD histogram is red, we focus on overbought reading of RSI, and then we wait for RSI line to cross below the moving average line. In this case, by the time that crossing happened, the histogram became green. So we stop with the signal and wait for the next opportunity. One good point about this trading strategy is that when the market is flat and we have false signals of overbought or oversold, they are rejected by histogram changing between green and red. For example, here, while the MACD histogram is green, we have oversold reading here, but by the time that RSI crosses above the moving average line and this candle is closed, the histogram has already changed to red and the buy signal is rejected, and you can see that the price declined after that. But this doesn't mean that you will not have false signals at all. During the times that the market is in a trading range, you are more probable to have false signals, like for example this sell signal here, which is a confirmed signal, but it was a false signal and the price advanced after that. But during the times that the market is trending, you will have the highest probability setup, like for example this buy signal here, which is completely confirmed, and you could enter a long position around here, or another buy signal here, which is also confirmed, and you could enter another long position around here, and both of them profitable. But in compared to other trend following strategies, this method performs much better during reversal points of the market or during range markets. For example, following this uptrend, the market here became flat, and just before this, here you can see that we have oversold signal while the MACD histogram is green, but when RSI crossed above its moving average line, the MACD histogram already became red, so this buy signal is rejected. But here, while this MACD histogram is red, we got overbought reading here, and then when RSI line crossed below the moving average line, MACD histogram is still red and we have red Heikin-Ashi candle, so we could enter a short position around here, and this trade would also be a profitable trade, as you can see. As I said, the accuracy of this trading strategy is very high, and during range market or reversal points of the market, it performs much better in compared to other strategies. But this doesn't mean that you will not have false signals. No trading strategy is capable of this, and losing positions are always part of the game, and you just need to manage them properly so you can become a consistently profitable trader. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategy that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it because risk management is one of the key factors for becoming a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.